Hi, my name is Jack Paladino. This is my international business finance project on Volkswagen. The goal of this project is to provide the audience with a view of Volkswagen's history, current events, financial values, future prospects, and top analyst recommendations. Volkswagen was founded on May 28, 1973. It started off as a state-owned automobile company run by the Nazi Socialist Party. It was originally named something that is extremely hard to pronounce, so I'm not going to give it a shot. It was renamed Volkswagen Werk, which is translated as the People's Car Company. It was originally based in Wolfsburg, Germany. Hitler had a plan to mass develop cheap and affordable cars during his time as Chancellor of Germany. The Allies, after the war, attempted to rejuvenate the company. Advertising campaigns to rebrand the company began in the United States, sort of as a way to get the Nazi brand away from the car company itself. And by the 1960s, it became a top-selling import in the United States. So a little bit about the top management of Volkswagen. Matthias Müller is the chairman of management board and CEO. Mr. Müller was appointed CEO of Volkswagen AG on September 25th, 2015. He's also been chairman of the management board since September 26, 2015. Prior to this, Müller served as CEO of the Porsche AG, which is a Volkswagen subsidiary, since October 1st, 2010. Following graduation from the Munich University of Applied Sciences with a degree in computer engineering science, Müller worked at Audi as a product manager. Müller also worked as a coordinator for Audi, Lamborghini, both subsidiaries of Volkswagen, before becoming CEO of Porsche. Frank Witter, the Chief Financial Officer and also a member of the Board of Management. Mr. Witter was appointed CFO of Volkswagen AG on October 7, 2015. Since then, he has also been a member of the Board of Management. Until his promotion to CFO, Witter served as the CEO of Volkswagen Financial Services. From 2015 to 2015, Witter held positions of CEO, CFO, and a member of the executive board at Volkswagen Group of America. Prior to working at Volkswagen, Witter held the position of corporate treasurer for S. Group. He started at Volkswagen in 1992, where he was in charge of the capital markets business section. Herbert Diess, the chairman of Volkswagen Brand Board of Management and member of Board of Management. Dr. Diess was named a member of the Board of Management at Volkswagen AG on July 1st, 2015. He has served as the chairman of the Board of Management of the Volkswagen passenger car brand since September 28, 2015. Formerly, Diess served as a member of the Board of Management at BMW from October 1st, 2007 to December 9th, 2014. In addition to his role at Volkswagen, Diess has also been a member of the supervisory board at Infineon Technologies. Francisco Javier Garcia Sanz, procurement chief and member of board management. Dr. Sanz was a member of the board of management at Volkswagen. He's been a member since July 1st, 2001, and also serves as the company's procurement chief. In addition to roles with Volkswagen, Sanz also serves as a member of the supervisory board for Audi AG and Porsche AG. Sanz earned a degree in business administration from the Academy of Business Administration in Wiesbaden. Andreas Hermann Rentschler, head of commercial vehicles and member of the board of management. Mr. Rentschler has served as the head of commercial vehicles and has been a member of the board of management since February 1st, 2015. Rentschler has also served as chairman of the supervisory board for Rolls-Royce, chairman and director of Mercedes-Benz, chairman and director of Scania AB, and as director of Mitsubishi Motor Corporation. He earned degrees in business engineering and business administration from Technical College, Esslingen. A little bit about the automobile industry itself. Worldwide automobile sales reached 88 million in 2016. This was an increase of 4.8% from 2015. Recent rates of return on capital have been an issue. Companies are not earning back their cost of capital, which is leading to bankruptcy. It's also pushing companies to cut corners to save money. For example, in 2015, the Volkswagen emission scandal came to light. Volkswagen implemented a defeat device to beat vehicle emission testing in millions of their cars. The EPA allows for only a certain amount of emissions to be released from cars into the air. Volkswagen's device made it seem like their cars were releasing less emissions than they actually were. The chart to the right shows how automobile companies overall are not making back their invested capital, and Volkswagen Group overall had sales of 10.7 million in 2017. Volkswagen's top three competitors are Toyota, General Motors, and Ford Motor Company. We'll get into more of those later. Volkswagen Group surpassed Toyota sales in 2016. It's now the world's largest auto manufacturer. Volkswagen Group sells automobiles under Audi, Bentley, Bugatti, Lamborghini, Porsche, Seat, Skoda, Ducati, MAN, and Scania. There are no insider trades at Volkswagen and no top management personnel own stock in the company. You can see the graph shows that Volkswagen's current stock price is $40.21. Volkswagen stock price took a hit after the 2015 emission scandal, but has been able to bounce back since that decline. The company has a lot to look forward to with their push toward electric cars. As you can see, this chart shows that Ford stock is at $11.27. Ford has blamed their constant declining stock on higher costs for steel, aluminum, and other metals, as well as currency volatility. The company has implemented cost-cutting actions that could show benefits as soon as 2020. The graph here shows that General Motors stock is currently at $37.78. General Motors stock has been trending upwards since Morgan Stanley has reported that pickup trucks are a reason to believe in the automobile industry. General Motors now specializes heavily in pickup trucks. The graph here shows that Toyota stock is currently at $126.20. Toyota has recently outperformed the auto industry. The company has plans to ramp up electric car production, in which it has a goal to sell around 5.5 million units by 2030. Moving into some financial analyst reports, the company Volkswagen has been able to move past the 2015 emission scandal. Shares plunged 30% after the scandal came out, wiping out $34 billion in market capitalization. Since then, the stock price recovered over $40. According to the Seeking Alpha report, the market value will converge with the company calculated value in the long run. Asset reproduction value and earnings power value show Volkswagen is trading at a significant discount. Deliveries to customers were up 2.6% in 2017. Profits before taxes increased 8.6 billion euros from 2016 to 2017. The company began to focus on electric vehicle manufacturing in the recent past. There is confidence that the share price will surpass $50. So according to Seeking Alpha, Volkswagen is on the right road to recovery, and it is time to buy their stock. According to Reuters, the mean consensus based on 30 analysts is that Volkswagen stock is outperforming compared to the industry. It is a good time to buy Volkswagen stock as an investment is expected to perform better than the return generated by a particular index or the overall market. The chart to the right shows that over the past 2.5 years or so, analysts have been recommending investors to buy Volkswagen stock. According to the report from ShareWise, the price of Volkswagen is expected to increase by 21.15% in the near future. Volkswagen once again is rated as outperform according to the company, and is a good time to buy Volkswagen stock. On average, CNN analysts project Volkswagen stock to increase by 16.03% in price in the near future. The consensus among 32 analysts is to buy Volkswagen stock. The chart shows where Volkswagen stock price has been over the last 12 months, as well as where analysts believe the stock price is heading in the next 12 months. The overall consensus is that the stock price will be rising. According to the Market Watch report, once again, the majority of analysts recommend investors buy Volkswagen stock. Moving on to some press releases, the Wall Street Journal article titled "Volkswagen Takes New $2.9 billion Hit from Diesel Scandal." Essentially, it describes how the company paid $25 billion in fines, penalties, and compensations. It showed how 11 million diesel vehicles were equipped with a defeat device by the company. After the hit in 2015, global revenue increased 4% in 2017. The company reported net income of 5.4 billion euros in 2016. The New York Times article, "Volkswagen to Pay 10 States Over Environmental Claims." It describes how the company pleaded guilty to commit wire fraud and violate the Clean Air Act. The states seeking compensation were Connecticut, Delaware, Maine, Massachusetts, New York, Oregon, Pennsylvania, Rhode Island, Vermont, and Washington. This is the first time that states involved have successfully sued an automaker for violating state emission laws rather than federal. In addition, Volkswagen had to pay fines on every vehicle sold in that state with a defeat device equipped. In the Barron's article, "Volkswagen Road to Recovery," the article describes how shows that with 70% of the U.S. emission claims paid, the company could put diesel scandal to rest. Electric cars could account for 25% of Volkswagen Group sales by 2025. The industry is changing, and so must Volkswagen. Moving on to some key numbers, the PE ratio gives investors the dollar amount they can expect to invest in a company in order to receive $1 of the company's earnings. The average PE ratio is 20 to 25 times earnings. Generally, a high PE ratio suggests that investors are expecting higher earnings growth in the future. Valuations and growth rates of companies may often vary wildly widely due to the differing ways that companies earn money and the differing timelines that they earn money. Volkswagen's 2017 PE ratio is 13.33, Toyota 11.09, General Motors 21.35, and Ford at 11.35. The dividend yield shows how much a company pays out in dividends per year relative to the company's share price. All things being equal, investors will prefer a company that has a higher dividend yield as you are getting more bang for your buck. It depends though, as a company with a low dividend yield may temporarily be attempting to grow capital, and a company with a high dividend yield may only be doing so for a short time. Volkswagen's 2017 year-end dividend yield was 1.22%, Toyota 2.96%, General Motors 3.68%, and Ford at 4.80%. The Moody's rating scale is as follows: AAA, AA1, AA2, AA3, A1, A2, A3, Baa1, Baa2, and Baa3. Volkswagen had Moody's third highest rating at AA3, Toyota the same at AA3, General Motors and Ford both at Baa2, which is the second lowest. Beta is a measure of risk of a security compared to the market as a whole. A beta of less than 1 means that the stock is less volatile than the market. Therefore, a beta over 1 means that the stock is more volatile than the market. Volkswagen's year-end 2017 beta was 1.52, Toyota 0.92, General Motors 1.47, and Ford also at 0.92. Moving on to ROE and capital structure. A company's capital structure shows how the firm finances operation and grows by using different sources of funds. Volkswagen's total debt to total equity is 178.56, total debt to total capital is 64.10, total debt to total assets is 39.05, long-term debt to equity is 94.84, long-term debt to total capital is 34.05. The debt to equity ratio determines the proportion of shareholders' equity and debt to finance a company's assets. The average debt to equity ratio is somewhere between 1.5 and 2.0 for companies. A high debt to equity ratio may infer that a company may not be able to generate enough cash to satisfy debt, while a low ratio may infer that the company is not taking advantage of increased profits. Volkswagen's debt to equity ratio of 1.209 falls just below the 1.5 to 2.0 range and is a good sign for investors. Return on equity is determined by net income divided by shareholders' equity. It determines how efficiently a firm can use money from shareholders to generate profits and grow the company. Volkswagen's ROE of 11.35% is a good sign to investors as the company is generating sufficient income and putting shareholder money to good use. Moving on to growth rates compared to competitors. Earnings per share measures the amount of company's net income that is available to pay the shareholders of common stock. A high EPS may seem favorable, but it depends on the company's stock price. Volkswagen's EPS took a hit when the 2015 emission scandal came out. General Motors now has a negative earnings per share, which means that the company is losing money. Ford and Toyota have stayed pretty consistent over the last 5 years. Dividends per share measure the amount of dividends that the shareholders receive on a per share basis. Increasing dividend per share shows investors that the company is experiencing strong performance. Volkswagen's DPS is slowly climbing back up after the emission scandal hit. All competitors otherwise have had a fairly stable DPS. The book value per share represents dollar value remaining for common shareholders after all assets are liquidated and all debts are paid if the company were to dissolve. Once again, Volkswagen's BVPS is starting to increase after the 2015 hit. All other competitors have stayed consistent or increased at some point over time over the last 5 years. Below are a couple of charts just showing Volkswagen's EPS growth, DPS growth, and BVPS growth over the last 5 years. Moving on to merger and acquisition history, Audi was bought by Volkswagen in 1966. The companies began to target a more upscale audience with the Audi brand since the early 2000s. In 1998, Bentley, Lamborghini, and Bugatti were all acquired by Volkswagen. Bentley's facilities were upgraded. Lamborghini has maintained a strong supercar reputation, and the Bugatti Veyron is considered the fastest consumer car on the market. Porsche and Ducati were both acquired in 2012 as an attempt for Volkswagen to diversify their strategy between an ultra luxury brands and just luxury brands. Skoda and Seat were acquired in 2000 and 1990 respectively, and these brands target lower-end consumers. This excerpt from Volkswagen's company page essentially describes how the company uses currency forwards, currency options, and currency swaps in order to minimize their foreign exchange risk. The Trump administration plan to scrap NAFTA could leave you paying more for your Volkswagen car. Car parts sourced abroad will have a higher cost and will disrupt supply chains that have been in place for over 20 years. In an effort to boost U.S. jobs, Trump wants to make it so that 85% of cars are made in the NAFTA region. The chart shows the regions where Volkswagen sources materials from. My recommendation is to buy Volkswagen stock. The stock price is expected to increase by top analysts across the financial world. The company did a strong bounce back after their emissions scandal, and there's a positive outlook on their electric car production in the future.